Welcome to Show Me the Money with Michael Dirk. Show Me the Money is a podcast that is bringing in industry leaders in the commercial real estate sector that are either on the financing side, the development side, the acquisition side, disposition, brokers, investors, bankers, management companies, everyone that's in and out of the business and all facets of the trade, so that hopefully you can benefit if you're looking to grow your business, start your business, or maybe transition into something else. On this episode of Show Me the Money by Michael Dirk, we have Kyle Kazan. Kyle is one of the founders of Beach Front Property Management, Beach Front Properties, as well as the Glass House, one of the largest cannabis firms in the United States, a legend as far as raising money and managing properties with over 14,000 units and over 500,000 square feet of commercial space under management, as well as growing a full cannabis firm, which is very extensive. So I think you'll learn a lot from this episode. Please stay tuned. Well, good afternoon, everyone. Welcome to another episode of Show Me the Money with Michael Dirk. We have a very special guest and a friend, person I've done a lot of business with over the years, Mr. Kyle Kazan. Kyle, thank you for being here today.
Thanks for having me, Michael.
Thank you. Kyle Kazan is the founder and chairman of Beach Front Property Management, co-founder and managing partner at Beach Front Properties LLC, and founder and CEO of Glass House Brands, a vertically integrated cannabis investment company. His portfolio spans residential and commercial properties across the U.S., China, and Germany, with focus on commercial properties, distressed properties, earning Kazan a reputation of both an impact investor and vulture investor. He is recognized expert in repositioning rundown properties into stable assets, as well as a court-certified expert in property management. In addition to real estate investing, Kyle has also been involved in the management of venture capital. He has been a director of Dalton Distressed Mortgage Fund, Dalton High Yield Mortgage Fund, and Kings Bay Investment Company Limited. Prior to forming Beachfront Property Management and Beachfront Property, Kyle was a special education teacher and subsequently served for 5 years in law enforcement, where he garnered his expertise in gang and drug identification/eradication. Kyle has extensive experience in repositioning troubled assets, turning them into a pride of ownership property with high occupancy, above market rents, and high ratings from residents. His guest lectures from management and investing at NYU Stern Business School, UCLA Anderson Business School, USC Marshall School of Business, and various industry events. Kyle received his BA degree in history from none other than the University of Southern California. Go Trojans. It's amazing how many guests we have on this show who are affiliated or primarily from and gone to University of Southern California. So it's amazing. Obviously, the school's got something that works, and you're the prodigy of it right here. So I can't thank you enough again for being here. Kyle, what does the last year look like for you at Beachfront Property and Beachfront Property Management? And I guess you can throw in the cannabis company too. Why don't we just look at all three right now and maybe just a little touch on each one to see what's going on there? Sure.
Let me start with the management side, Beachfront Property Management. Since March of 2020, it has been very, very hard. That's all. My focus is watching primarily the California market, Southern California. Beachfront Property Management manages around 14,000 apartment units in LA and Orange County, wow, and about 500,000 square feet of commercial. So we're heavily focused in on what happens in all the various cities of LA and Orange County. It's been very hard. California took some business shutdowns. They took some very aggressive approach during COVID and made it very hard on business, which basically residents that live at all these properties, they need work checks to pay rent checks. And right. So it's been hard. A lot of communication with owners, just trying to kind of give them the updates on what's going on. Since the pandemic, California, the legislature has not been friendly to apartment owners. They're trying to pass different legislation, I would say, because inflation has caused there's not a lot of we're always underbuilding, which causes rents to go up. And in response, the legislature is trying to implement more and more rent control. It's tough, and then throw in interest rates, which would lead me to Beach Front Properties LLC, which is my syndication firm that we own a lot of properties, and including in Southern California. And happily, and you got us some great debt. We're in good shape. We don't have anything coming due for 5 years, something like that. But if you do have stuff coming, it's a problem.
Right.
It's a real issue.
100%.
And so I explained to our partners, and I know you're also invested with us. I know you invest with probably a lot of the Trojans that come on the show.
Right.
Throw some pennies in. It's kind of explaining now this is my third recession. Black Swan has shown up. The Black Swan here happens to be interest rates. And that's what's caused the divide between buyers and sellers. So it's just sort of explaining. Then they say, where do I think things are likely to go from my experience and to the best I can triangulate where I think. I share that. And then on the cannabis side, it's a publicly traded company. We've got no federal relief, including to date. Over 2,700 people are serving some life sentences for nonviolent cannabis crimes, which is just baffling because I'm sitting here talking about it. And I'm the chairman CEO of one of the largest cannabis companies around, and one of the largest in California, if not the largest. That was basically a private equity fund out of Beach Front Properties that we then just spun out. That's a fascinating. It's a whole other conversation.
Right.
But we got into it with buying real estate, and then
leverage
the
real
licenses.
estate into cannabis.
100%. I think everything always starts with real estate to me.
Right.
So yeah, I would say as we sit here in 2023, we'll look back at this in a few years and go, remember that hump that we had dealt with, and we'll laugh about it. Hopefully, we'll have all gotten through it.
Right.
I know it's not fun for you right now. Interest rates going this way are not fun. When they start going the other way, I think you're going to find yourself over busy.
I hope so, because I know in the next 12 to 24 months, the trillions of dollars of debt that needs to be repositioned, people are going to have to do something, because most properties are not cash flowing at 7.5% to 8%.
No.
The last time I checked, even interest only wearing off, the payment goes up by 40%. So it's going to be it'll be interesting, and I hope for everyone's sake that we get through this relatively unscathed. But unfortunately, from what I'm seeing, there's going to be some shrapnel there to be taken.
Yeah, the phrase that I like, and I don't know who came up with it, soft landing. I don't even know. I know what it means. I've just never seen it in practice, and I don't believe in them.
Right.
People are emotional, and emotions a lot of times overrides logic.
Right.
And so people sell when they probably shouldn't, and most people don't buy when they should.
Right. You're 100% right. How do you and the team evaluate investment properties, at beachfront? Like, what are you looking? Are you focused on location? Are you focused on just upside? I mean, are you focused on a long-term hold or some, flip property? What is your, method behind that?
Yeah, flipping has not ever really been. I mean, have I end up flipping? Yes, but that was just because what I bought, the opportunity presented itself. I don't think that's a good way to
create wealth.
Flipping is not really a wealth thing. Also, remember, you don't pay capital gains if you flip it within 12 months. It feels, when I hear flipping, I think musical chairs. I think if you buy for value, usually that's when you said upside is that there's meat on the bone.
Sure.
And if you're lucky enough to be able to see a path of progress, I think that's. I was down in South Carolina, right on the coast, in North Charleston and in Charleston. Charleston is an A location.
Yes.
North Charleston, pretty much like Long Beach was 20 years ago.
Okay.
You got Rough, and then I went to a place called Park Circle, And you could see it's like right in the sea of like pretty, it became kind of artists, it became kitschy cool, and you can see the properties all around it were great.
Okay.
So when I was looking at it, I just said, I don't want to invest here. I wish I had, but
Sure.
where's the next? And so I like to buy places that are tougher, that I think have a chance to be in the path of progress.
Okay.
Because typically if you're willing to buy something, say more bread and butter, or our parlance would be a C property,
Okay.
one, you're renting to people that are probably blue collar. So that's usually the biggest pool of renters. So you're
Sure.
serving them.
Yes.
And even in a downturn, everybody needs a place to live.
Yes.
So, and then if the area picks up, then it would cause you to hopefully reinvest in the property. And as units came vacant, you would go ahead and fix them up. And oftentimes when progress starts hitting your area, the market rents jump pretty nicely. And that's happened to me a number of times over my career. So.
Oh, yeah. In places like outside of California, you have much more, I know you and I have talked about this over the years, you have much more control of the real estate as well as a landlord versus, areas like California are just not as landlord friendly. I mean, just to be very blunt and black and white about it, there's no real guesswork. But places like South Carolina, right, it's very, you control your real estate, and if there's issues, someone doesn't pay, you can actually evict a tenant. You can actually do things and not have some moratorium where you still have to pay every bill, but you don't get to collect the income, and that's your problem. And that's a very strange place to be that we've seen, obviously, over the last few years. It'll be interesting to see what happens down the road and whatnot. But, obviously, with supply-constrained market, like you said, rents are going to just continue to go up. So how that's going to be measured, who knows?
Well, Michael, you finance all
Product
type.
It
doesn't matter to you.
Right.
And so when people say, hey, and let's use Orange County where we're sitting right now. So a tough area might be Stanton.
Sure.
Okay. And a great area might be Newport Beach, where you'd say that's an A area versus C area.
Sure.
So I think it's a fallacy, as someone who manages a lot of property and has been doing it a long time, that an A area is easier management versus, say, first-generation immigrant, blue-collar in Stanton versus the folks that are driving the Teslas and the BMWs in Newport Beach. Both have needs, and both have different expectations. And so I'm going to get a higher cap rate by buying in Stanton because people look at it and go, oh, I don't want to own in Stanton. I'd rather own in Newport Beach.
Right.
One, like Cliff Warren was one of my mentors early on, and he likes cities that end in beach. Okay. And he always used to say, you like all the tough stuff. And I was like, it's not tough. We manage stuff in Newport Beach. We manage stuff just down the street.
Right.
It's not easy. Those folks want it, hey, I stay at the Ritz-Carlton. I want that service now.
Right.
Folks in Stanton, it's a little bit different. They have needs, a little bit different. So when I got into this business way back in the early 90s, I didn't have a lot of money, so my dollar went further, and I got a higher cap rate with bread and butter. So that's where I cut my teeth, and that's where I still feel pretty comfortable when I'm looking in, whether we're talking South Carolina or anywhere out of state.
Sure. Yeah. We're seeing a lot of clients start to diversify their economic base out of different states, like California, moving into Texas, moving into Tennessee, the Carolinas, Georgia, the South, more tax-friendly places too. You look at Texas, Tennessee, Florida, all zero, state income tax too. And a lot of people have migrated there. So arguably, those could be better for the long run. Whether that's going to sustain or not, we'll see what happens there. But with that being said, out of anyone I've had on the show, you probably have maybe the only or more experience than anyone investing in real estate outside of the United States. So as a global investor, it's hard enough to invest in your backyard. How did you go about doing that? And, looking back, do you wish you would have invested more or less? Or, if you can touch on that a little bit, because the viewers have not heard from anyone investing outside of the country.
So I have, as of 2019, I need to update that profile. We sold our properties in China We used to own in Shanghai. We sold between 2008, which was the Olympics, and 2010, which was the expo that was in Shanghai. That was part of from when we bought, that was what we were going to do.
Okay.
And in Germany, we liquidated in 2019. Part of it was we went from no rent control to rent control on vacants. We went to, only 10% of people in Berlin own properties, so it's a renter's market, and they vote. It's democracy.
Right.
Okay, so they didn't vote. They came with pitchforks.
Right.
Lovely city and everything. So I guess what I would tell you is it's a higher level of complexity when you leave the country. If you decide to leave whatever market, if you're watching this and you own a building or you want to own a building and you leave your backyard, whether at first it used to be when I was buying big buildings, it had to be a bike ride from my house. Then it was an hour car ride, which got me to Anaheim and some of my first Orange County purchases. Then it was an hour flight. And then but each one of those, and I learned here where it was like, Anaheim's different than San Pedro. And so I realized that you really need to understand not just the market, but the sub-market. And you really need to understand, like if you bring up Texas, and I've owned in Texas since 04, 03, no, 02. I own in Austin. The property taxes there are not Prop 13.
No.
Okay. And they're also not 1.25. Let's call it 1.25% here in California. Thanks to Prop 13. And then they can only go up 2% a year from there. It's very easy to understand.
Sure.
There,
it's the Wild West.
Yeah, and so just where you can start to get ahead when you own here in California, you own long term, you really benefit from Prop 13. You go to Austin, and I still have properties, and I'm amazed where I'm like, God, I'm not making that much money in this property, and I protest them every single year. So what I would tell you is in the United States, even in the next county, it's really important to get your shoes dirty. Too many investors I know are like, they just want to phone it in. If you want to phone it in, find a syndicator like myself that's actually doing the work. It's like a big investment. If you're a pension fund, you want the hedge fund folks that are out there doing the work.
Yes.
And so, but if you're just investing in your own account, it's like, I'm going to buy a rental house in Florida, and I know what it is in California. That is a great way to get your lunch eaten, because there's people that are local everywhere that you can name. In the U.S., you have 1031 exchanges. You have things that you can take advantage of throughout the United States. When you leave the country, now you have a currency situation. Believe it or not, I was in Ukraine in 2012 and looked at the market in Kiev and was like, really happy I didn't buy there. But the problem was property rights was not a big deal. And the whole court system, Ukraine is corrupt. I know the narrative that you see on TV is that it's little America. That's not the case. And I can just tell you on the real estate side, talking to folks on the ground, it's a complete mess going into the war with Russia that they're having. So the big thing I would say is due diligence means get your shoes dirty, go do the work. And, outside the U.S., you don't really have Mark Similachap, which is one of the places that in the U.S., I would always look for the M&M, and I'd look for some of the other big firms and find out who the Michael Dirk is in that office, who's up on that top 50, because I know they're doing some real business, and then get to know them and learn the market. But, you got to be careful. And if you're looking for long-term like I do, you're trying to find deals that you never have to sell. A lot of this Warren Buffett spells out beautifully. Be greedy when others are fearful. Be fearful when others are greedy.
Oh, 100%.
Buy as if you can never sell it.
Yes.
So I think he's a pretty wise person and knows what he's doing. And so that's my take is get your shoes dirty, do the work. Nothing comes easy. And then the other thing is when you have a downturn, the obstacle is the way.
Yes.
And so what's likely to happen in this, I think in the coming mess that we're going to have, commercial-backed mortgage securities are screwed. And one of the things I'm seeing right now are any of the projects that people bought in the last 2 years and they threw bridge debt on, they're screwed.
Right.
And, sometimes that black swan shows up, and this one, I didn't see it coming.
Sure.
But I've also I think I invest a little differently, and I did brilliantly when rates were 8% going to 2%, and I'm hoping I can survive and do decently as they
as they go back up.
But that was a 15, 18-year process down, or 20-year process down. This process just moving back from 2 to 5.
Right. Yeah,
that
6 is now. I mean, it's
6.
It's tough to gauge. It's tough to gauge, and who knows? And depending what the Fed says, right, in the months to come, what the real goal is, what the plan is, it's hard to gauge as to what the guise of. I don't know if the guise is the right word, but inflation, obviously measured. But when you throw $5 trillion in the market, overnight during COVID, how can you not have inflation and you artificially buy treasuries and now ratchet it all back immediately thereafter? The effect is, I always say driving a sports car into first gear, then all of a sudden we're going to sixth gear, then back to first gear without switching gears. The transmission is going to be on the street, and that's how
I've not heard that analogy, but it's a great one. When I look at things, you have sort of dual forces right now. And one of those is the interest rates. And the interest rate, the whole goal is to get inflation down to 2%. That's the stated goal of the Fed, and I believe that that's what Jerome Powell wants to do.
Sure.
At the same time, what's driving inflation, as you said, is the money printing. Mm-hmm. Well, take the demo publicans who can't spend enough money on Ukraine and military and cut great deals with Big Pharma and all the other stuff that they do. Mm-hmm. Well, they're not, the facade is all the social stuff that everybody's bickering about online.
Right.
Meanwhile, the money printing is going on, so hard assets like real estate typically do well.
Yes.
But you can't really get into real estate unless you want negative leverage today. But I think we're going to start to see some of that turn, and I think right now, it's a great time to be patient, but also be learning. So if I'm new if this is a you or a me that's starting out right now, but is really interested or is early in the game, this is a great time to be out there learning and making your relationships.
100%. And this is a time I always tell younger brokers in the business or younger investors, this is the time to gain market share. Mm-hmm. Really, because when it's so difficult out there and there's not a lot of transactional volume, the real principles in the business are going to be there thick and thin, and they're looking for expertise and knowledge of exactly what's happening day in and day out. Because a lot of people might be transacting once every 3 months, 6 months, once a year, and you can't say that you really know what's going on day to day. But when a broker is calling on the phone to 300 to 400 people a week, they really understand and hear what's going on and where the investors are thinking. There's no way I'm not buying, no way I'm not selling. Or it's just, or I'll sell at this price or whatever it is. But to understand that, having the boots on the ground, like you said, is priceless.
Well, the folks that are at an M&M office or at your office, they're a wealth of knowledge. And for the most part, if you're willing to buy lunch, a lot of folks will come and over lunch we'll share. That's a cheap way to get some mind share, in my opinion. Right. And so you're 100% right. And so, but this squeeze, I went through the 90s, I went through 2008, now it's this one. Some things are different, but some things are pretty similar. And but people just get dour, or they get over exuberant during as they go.
Right.
But look, I love real estate. I do think diversifying. I think California, it's not going to go away. You can argue about Detroit. Mm-hmm. Detroit's cold. Detroit has many things going for it, but it doesn't have California weather. No. It doesn't have the institutions that are here. California is its own country when you really look at it in a lot of ways. And, we're sitting here in Orange County, California. I've been lucky enough to travel all around the world. There's not many prettier places than here. Yeah. And in LA, the same thing. So you're right. I think even San Francisco, where we have all kinds of opportunities that are sort of landing on my plate, and I'm just like, it's easy to get too dour. But San Francisco is going to come back. It just, I'm not sure how or when, but I think when I talk to politicians all the time, here and in D.C., and what I've been told, and I was told even last weekend by a congressperson, every politician in California is getting a call or calls every day about homelessness. And so some of the reaction we're seeing on the rent side, I think a lot of folks that are making laws have never owned property and don't understand, maybe have rented but don't know both sides. So I actually think some of the stuff is good intentions.
Sure.
They don't understand the business, and they don't understand the unintended consequences that are going to come, which if you own a building and they slam more and more rent control on you, all they're going to do is slam the brake on more development. And then they're going to find themselves, when more and more people come to California, it's just going to be a very difficult situation. So I think completely divesting from California is a mistake, but not diversifying and getting some different exposure.
Yeah, I think diversifying areas, locations, as well as product type too is probably. And you've done such a great job on that with the commercial property you have, with the management company, the apartment buildings. I mean, office, industrial. I mean, you've had the gamut of all these different product types. So it's really nice to do that because who knows if another COVID hits or whatnot, and some people can't pay rent, some can. So it's nice to be able to do that, and you've obviously weathered the storm extremely well. I think some of this is just, a lot of people say, hey, buy the stock of something you like. If you like Starbucks, you like Costco, you should buy that. I think when I looked at, I have some office. Right now, if I said, hey, Michael, I need a non-recourse loan on office product, it doesn't even matter where it is. Right.
It doesn't even matter my financials. My property is 38,000 square feet in Palos Verdes. People still want their office because they don't want to do it in their home, and they don't want to get on the freeway.
Right.
So there's strong demand, and they're not building new.
Yes.
And then a commercial building I have also in Palos Verdes, I looked at it as, what can Jeff Bezos not take? I have like a barber, and I've got nail salon and an eye doctor, and stuff that's like,
necessities.
Yeah.
Right.
So
essential necessities.
And in a market where they're not building more, and I bought it below replacement cost.
Sure.
So, and that one I don't have any debt on. So I look at it and I just said, I think a lot of this is pretty simple. And both properties I talked about were in distress when I bought them, and for some reason.
Sure.
And so, I think that's, I've been very fortunate, but also I have never gotten caught up into say, I just got to keep buying, or, I just sit and I like to think.
Right. No, of course. Obviously, it's paid off. Maybe just moving into one more point here.
Sure.
We talked about the Glass House brands, how you're diversifying into cannabis. That business, do you feel that business, it's obviously in a transitional part where it came out like white hot. Now, I think, is there a consolidation going on in the business, or do you see large corporations coming in to kind of spearhead that business, or like where's cannabis now and where is it going, I guess?
Wow. So the height of cannabis on the stock market, and the height would have been when it was clear that the Democrats got the Senate in Georgia, because everyone thought, well, the Democrats, you got Chuck Schumer now in the Senate, Nancy Pelosi in the House, and Joe Biden in the White House. So this is going to go great. Stocks went crazy. We had not yet gone public. And so from there on, it has been from a slow bleed to a drain. It's been really ugly on the stock market. And for those that want an ETF, MSOS is a good one. I think it trades on the New York Stock Exchange. They hold a lot of everything. The fundamentals that I got in real estate are why a lot of my competition, like you look at MedMen, they're owned by the debt and they're not in the money and they're hurting. And everybody seemed to know MedMen. At one point, they were a multi-billion-dollar company. It has been, if you didn't invest through fundamentals, and I don't want to also, I need to emphasize there's always a little bit of luck in there. So I've been blessed with more than my share, I think. The backbone of what we've done is buy real estate right and not have a landlord that want to charge 5 times the rent to sell cannabis out of a store. And no business can really do that well when you're paying those kind of fundamentals. So we own a lot of our own real estate, or I've syndicated the real estate and kept a good return for investors that takes some of the risk, but not crazy, so that the business can do well. But I would tell you without going too deep, I think cannabis should, if you listen to 90% plus of the American people, they want it decriminalized. They don't want it illegal anymore. They want people to stop going to jail for it. And we got nothing from, the Senate, the House. They just did a lot of talking. But I would tell you, we're starting to see some movement on the federal side. If you don't follow cannabis, you may have missed that our Health and Human Secretary, Javier Becerra, said that they'd like to lower cannabis from Schedule 1 to Schedule 3. And stocks popped. Everybody's popped. And nothing really changed. It was just a recommendation. Now, Schedule 3 means there's nothing medicinal. And I can tell you, it's already well known through studies in Israel and even studies in the United States that there is medicinal aspects to this plant. But Schedule 3 would get rid of some of the bad tax situations that we're all in. One's called 280E. I don't want to get too wonky because most of your viewers probably don't know much about it. What I would tell you is I think that we're going to see brick after brick come out of this wall. The benefit to playing in this versus, say, real estate, where we're out, a lot of your viewers are going to say, I love value add.
Right.
I love value add. You love value add. Everybody loves value add, which basically also means that private money is reinvesting in real estate in communities to make it better, which then jobs at Home Depot, jobs of maintenance people, jobs of painters. So it's a really good situation. So I want to say I love that aspect. But I mean, if I said to you, Michael, can you name 30 people that do what I do where I do it here in Southern California? You're going to be like, 30?
30, no way.
So some of the people you had on your show are good friends of mine. And I'm like, yeah, we duke it out, meaning we're friendly. And then if they land with the ball, I call them, hey, congratulations. And where'd you get your equity? And how'd you do it? And they'll do the same to me.
Got it.
Cannabis, because it's federally illegal, all those friends that are super smart that do what I do, they're like, hell no, I'm not doing this. And institutions aren't doing it. BlackRock is not doing it. State Street's not doing it. Fidelity's not doing it. And so right now is a very interesting opportunity where I feel like all my smart friends that I have to compete with to drive pricing up, make business harder, they're not there. So I'm not saying there aren't very smart people in cannabis.
Right.
But being a syndicator means I know how to raise money. Buying properties for fix-up I know how to do my due diligence and budget. I understand debt. Mm-hmm. So I actually came in there thanks to being a real estate person, pretty well qualified. And then it's because I run a management company, which is extremely low margin. So if you're negotiating with me, I don't have a lot of margin to negotiate. And all management companies, it's just not easy.
Right, that's a hard business.
It's a hard business.
Very hard.
And so to make a go of it, so you combine the skill set that I got from all the stuff you and I talk about, has really put us in a good position. When it goes to Schedule 3, it'll be very interesting to see if that gets NASDAQ excited. Because right now we're trading on the OTC and we're trading on an exchange in Canada. That changes the game. Once the money comes in, then it's going to turn. It's going to be a new phase. And so I kind of have to tell you, I don't want these people serving prison time.
Right.
I work hard. I talk to a number of them, and I spend time talking to politicians. So I'll make sure we're clear. But the longer the money stays out is not bad for me in running that company and running this company. And banking is hard. Well, I had good banking relationships.
Yes.
So I was able to find ways to bank legally.
Which is great.
That's
terrific.
Again, and where did I make that? I made that relationship from real estate.
Yes.
So all things, if you're thinking about getting into real estate, I would tell you that that's the reason I live a much better life than I did when I was a school teacher or when I was a police officer.
Right. Of course. Oh, yeah. You've done extremely well. Well, one last item to kind of do a wrap on the show. I need to touch on a high point and a low point in life or career, if you want to touch on. I love the viewers like to see someone as successful as yourself, to see, the high, a low, and then more importantly, how you got back from that low. So if you could just touch on a couple of those things, please.
And this is going to be real estate specific?
No, nothing really. I mean, just life or real estate. You can pick what you want there.
So let me stick with real estate because life is a lot more boring, I think. I think real estate. So let me start with a low.
Okay.
We bought 181 units in Austin, Texas. And then the dot bomb really crushed Austin.
Like 2001 or
2002.
2002.
It may have started in 2001,
Yeah.
but when a lot of times the black swan is actually sitting there, you just don't realize how her feet are really
you're a dead man walking.
Yeah. And in the markets that are not Southern California, where they overbuilt, the A properties are in trouble, so they lower the rents and they offer specials to fill up, which attacks the B. And remember, I'm a C, so I'm getting hit really hard. All my tenants went to B,
right,
or even A property.
Okay.
When I say all of them, all of a sudden I started seeing vacancies go, and there are just, when the jobs get hit and they've overbuilt a market,
right,
it's a different phenomenon than Southern California.
Yes.
And so, and to boot, and I'll give you when the low point really hit, we had a chiller system, which I didn't properly understand. In getting my shoes dirty, I should have asked a lot more questions about that. And throughout my career, I learned so much more from my errors than I do from my pluses. And
we all do.
Yeah. And so I got a phone call on a Thursday that said, our chiller system's completely out, and that provides all the cooling or the heating. You can't have both.
Right.
So if you're in that like 70 degrees where you're warm but you're cold, or you're warm but your wife's cold,
right,
I got to pick for everybody.
Right.
So we're going to have heat and no cooling.
Pick one.
Yeah. So I should have known more about the chiller. I hate chiller systems.
Okay.
Even great deals, I'm like, I don't want a chiller system.
Right.
And so they said it's out and you won't get the parts you need for this thing until Monday afternoon. So Tuesday, maybe it's good. And we have a heat wave coming through Austin. So I said, oh my God, what are we going to do? They're going to kill and hang my manager and my management team down there. So what I did was I had this great idea, and that was to what they have at like AM PM Mini Market, put out by the pool, these thing of ice with all kinds of drinks in there to make a pool party.
Okay.
So a week later, I went down there, and I told them I'm with the management company. I'm a senior person management company. I never say, hey, I'm the owner of the property.
Right. Never.
But this was enough to almost get me hung anyway. And people were like, well, who is the idiot that thought bringing us all out in the sunshine to go get a drink and get a stroke to get a drink is a good idea? And I'm like, this is my low. I'm fighting for vacancies. And I said, that'd be me. Didn't like the idea. And she looks like if she had a gun, thank God, because it's an open carry state, she didn't just like shoot me in the head. Wow. So to me, I was like, and what did I do right after? I got on a University of Texas bus to talk to students to go, how do you pick your places? Why aren't you not picking mine? What do I need to do?
Yes.
And so that was my low, and and I had to do a capital call. It was first and one of the rarest times I've ever had to do that, where I just said, look, we have to we need to give everybody heat and cold at the same time. We have to just, instead of fix this huge thing. So, so that was a toughie. I learned so much about that. And I would tell you, grit will get you through.
Yeah.
Grit, and also saying, no matter what, we're not stopping. We will find a way through everything.
No quitting. Yeah. And
we did. And so I think I'm going to I've had many, many highs. I haven't had too many lows like that, and I do remember it well. And I remember this. The woman was just furious, and she was a nice woman, and she had every right to be angry. There was just I just don't know what the least worst option was. Clearly, that wasn't it. I would tell you in 2019, we sold that building. And I was a little bit melancholy in that it had been such a long run. Remember, 02 to 19 is a long...
17 years, yeah.
And all of a sudden in 19, there was a big run-up in the value in Austin. People just couldn't buy enough Austin.
Right.
And I was at a point where I needed to either reinvest in that property. It was time for a big facelift, or it was time to take chips off the table. And usually I'll just do the facelift. On that one, I felt really good for our investors because it was a huge win. When we sold it, and we had lots, when you're buying right, you're one of a few people at the table.
Right.
When you're selling, you have 20 plus offers that want to go non-contingent within, a week if they just get a quick inspection. So that felt really good because I'd had such a tough go at that when it made me feel good. And we only had like 5 investors in the deal, and I just felt really good for all of them.
Right. You did right by them. You persevered, and it paid off. And
it was a great day for everybody. And even though I like long-term holding. I think you invest in assets is how you build wealth. Sure. And so and everybody needs a place to live. Yes. Even the pandemic showed that clearly. Oh yeah. So those would be my high and low at one property.
Great. Thank you. Well, I hope everyone enjoyed this episode. Kyle has a very diverse background and has been successful in many different ventures, from real estate, property management, and cannabis, and who knows what's next to come. So, Kyle, thank you so much for joining us today. I think the viewers thoroughly enjoyed it, so I can't thank you enough. Everyone, have a great day. Thank you, Kyle.
And fight on for all you Trojans out there. Thanks,
That's
Michael.
right. Take care. Thank you.
Thanks.